Tax rebate. The taxman's secret. Be informed on how SARS can assist and help to fund your property portfolio. Under Section 13(6) of Tax Act No. 58 of 1962, 55% of the original purchase price is returned to you as a tax rebate over 20 years. This equates to 5% per annum. Mountain Crest Private Estate qualifies as an incentivized property. Please see the following example. Tax saving summary. The Section 13(6) tax rebate will apply if you buy 5 or more new properties. They don't have to be in the same development, but they could be. They don't have to be bought in the same financial year, as long as they are new, unused units. Place your first tenant. Then you can write off 55% of the original purchase price. Have a closer look at Section 13(6) of Tax Act No. 58 of 1962. Also see SARS Guide. Section 13(6) provides for an allowance in respect of residential properties acquired or constructed on or after 21 October 2008. Section 13(6) applies in respect of new and unused residential units, solely used for the taxpayer's trade, buy to let, located in SA. The taxpayer must own at least 5 residential properties in South Africa, all of which must be used for the purpose of a trade carried on by the taxpayer, buy to let. Let's take a closer look at the following example, where Section 13(6) provides for an allowance of 5% of the cost of a residential unit. For example, it provides an allowance on residential units acquired. On the 1st of March 2018, taxpayer A bought 8 new and unused houses directly from a developer for a cost of R2 million each. On the 1st of October 2018, the taxpayer rented out 3 units to family members and 5 units to the public. As a result, each of the 5 homes let to the public comprises a residential unit, as defined in Section 1(1), and thus qualifies for the Section 13(6) allowance, which is calculated as follows. R2 million times 5 homes equals 10 million. Since these 5 residential properties qualify for the 13(6) tax incentive, 55% of the original cost will be returned as a tax rebate over 20 years. 10 million rand times 55% is equal to 5.5 million rand rebate over 20 years. 5.5 million rand times 5% is equal to 275,000 rand annual Section 13(6) allowance. This figure is then divided by 12 and then multiplied with 45% to arrive at the monthly rebate amount applied to the 45% tax bracket. 275,000 rand divided by 12 and multiplied by 45% is equal to 10,312 rand total monthly rebate for 5 properties. The full allowance will be granted even though the 5 properties were only used for a part of the 2018 year of assessment. To qualify for the Section 13(6) allowance, you must own at least 5 residential properties. You do not have to keep it for 20 years. There is no reference made in Section 13(6) to 20 years. 5% per year equals 20 years to deduct 100%. Sell at any time, subject to recoupment. You don't have to wait 20 years before you sell these properties, but when selling properties, consider Section 13 requirements and impact, and the fact that you require a minimum of 5 properties for the rebate to apply.